and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, it's the final trading day of the week on Friday. The Nifty is absolutely flat for the week. And this week, we've actually seen the Nifty consolidating below its all-time high levels. There are several subsectors that actually took the baton to run one day after the other to save the markets from a deeper correction, be it shipping, railways, sugar, paper, agri-related stocks, autos, cement. All of them took turns to keep the market buzzing, at least below the benchmark level. As far as the earnings are concerned, now that will get a reaction from the D Street. TCS came out with the numbers after market hours yesterday, and that will be the first one that we will be watching out for. The big question is, will the Nifty get some or much needed direction from TCS earnings after the strong quarterly show? And of course, after the market hours today, there'll be again focus on the macro data numbers. Let's see how the day pans out. Good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. Thank God it's Friday and we have some excellent weather in Mumbai. I believe it's raining very heavily. And Delhi is not bad either. We've sort of paused for this complete week as Sakshi was pointing out, and right there in front of you will be the chart of the Nifty. We have some very strong cues, at least on the small caps that are coming in from Wall Street, but as far as our markets are concerned, absolutely flat trade yesterday. Remember, it was the weekly expiry of the Nifty. As far as markets are concerned on the Lal Street, and it ended absolutely flat over the last 5 trading sessions. Nothing much. Nifty started at 24,304 last Thursday and it ended at 24,350. Practically nothing happened in the past week. The index consolidated after a very sharp rally that was on its 5th week, as if the prices are concerned on previous Friday's close. So consolidation as far as Nifty is concerned, and that looks to be the way forward because we are not getting any decent cues for a move that can be on the higher side. 24,400 is where the bears are not letting the Nifty go beyond, and 24,200 is a level where the bulls have a huge support. And in this intraday 1.5%, 0.8%, 0.7% is the intraday movement that is happening over the last 2 or 3 or 5 trading session. We are about 6 sessions away till the national budget is announced on July 23, and the run up, ladies and gentlemen, is only and only in cash stocks. While the Nifty is maintained by one stock or the other, it was ITC some days ago, it was Maruti day before yesterday, it's Reliance on some days, it's banks on other days, but the fact is that it's only the PSU segment which is doing phenomenally well. We have very strong rallies over the last 3 trading sessions on railway stocks such as RVNL, IRFC, IRCON, RailTel and RITES, including wagon makers. Yesterday, the defense counters came back into action. You saw a 5% uptick on Cochin Shipyard and Garden Reach. Mazgaon was up 7%. There was a green tick on Hindustan Aeronautics as well. BEL and BDL were also shining in trade. So it's the sequential rotation of money which is putting these PSU stocks in a higher orbit. They rest for 2-3 days, one more sector comes up, and then the previous sector comes up for gains. Fertilizers, agri. Yesterday was the theme for shipbuilders. Probably fertilizers will start kicking in today. So keep an eye out on the entire PSU basket. There is no let up. If you are a new investor, a new trader into the markets, you need to exercise extreme caution because prices, valuations and participation is elevated. These are euphoric markets. It's always best to be more than extremely cautious when you are putting in hard-earned money as far as prices are concerned. Sakshi pointed out TCS earnings. My understanding is that it's extremely muted and markets will react negatively to it. So let's see what TCS does. Apart from TCS, we have HCL Tech and IREDA. These are the 2 earnings that are coming in today. We'll be discussing IREDA in great detail. Remember, it's just 8 months to its listing. Price was 32 rupees at listing. IPO, and now at 279. The counter is already 7 times above its issue price. Keep that in mind. Also, you'll see Any dip in the Nifty being purchased towards 24,200, any dip in the Bank Nifty towards 51,500, 51,800 will be purchased, and that's the intraday play, ladies and gentlemen. Buy the dip after the initial 10, 15, 20 half an hour of trade has happened. Options data, as I had very pointed out, 24,400, 24,500 is where the bears have made their defense, and they're not letting the Nifty go higher, and the bulls have a very strong support at 24,300 to 24,200. We'll wait for Sakshi's commentary on Wall Street, ladies and gentlemen, and then I'll show you another graph that I have made for today. Sakshi, over to you. I believe inflation numbers are good as far as Wall Street is concerned, and you just might have a surprise coming in September.
Yes, absolutely, and that's on the rate cut front, Shell. So the US markets ended mixed despite softer than expected CPI inflation data, because there was profit booking that actually took place in the tech stocks that weighed on the Nasdaq. Now, headline CPI inflation grew at a slower pace than expected, just at 3% on a year-on-year basis in June, and thus raising bets to up to 85% chance of a Federal Reserve rate cut in September. But we did see the S&P 500's longest winning streak since November coming to a halt by the same cohort that powered the index year-long rally, the mega cap tech stocks. Investors bailed out of the so-called Magnificent Seven stocks: Apple, Microsoft, Nvidia, Alphabet, Amazon, Meta platforms, and also Tesla by most in over a year that we've actually seen, and therefore we did see the Nasdaq plunging almost 2%, the S&P 500 declining by 0.9%. The Dow Jones, however, ended about 0.1%, 0.08% higher in trade. Now, as far as the Brent crude levels are concerned, that was trading about 0.05% lower at $85 a barrel. Gold rose about 1.7% to $2412 an ounce, so we'll keep an eye out on the precious metal. When we talk about the kind of moves that we've been seeing across the Asia markets, they are also mixed in the early trading action. If we look at the Nikkei, that's down by 2%, feeling the dent. Kospi down 0.1%, Hang Seng up by 1.4%, and the Shanghai up by about 0.8% as well. The Gift Nifty, however, is looking at a positive or a gap up start, but we'll see whether that sustains in the market also or not. As far as the overseas investors are concerned, they've turned net sellers of the Indian equities. This is after being buyers for the last 6 trading sessions as well. So about 1137 odd crore rupees was offloaded by the FIIs, while the domestic institutional investors, they stayed net buyers for the 4th session. They bought equities worth about 1676 odd crore rupees in yesterday's trade. Now, as far as some of the stocks are concerned, of course, TCS is something that we'll look at first. India's largest IT services company, it reported an 8.7% year-on-year jump in its consolidated net profit at 12,040 odd crore rupees. This was ahead of estimates, although when we see sequentially, this was a dip on the back of the wage hike pressure that we saw on margins and profitability both. But even the constant currency revenue number came in ahead of estimates as well. Anand Rathi is also going to be in focus because the leading non-bank wealth solutions firm has reported a 37.9% year-on-year increase in net profit at 73.2 crores for the first quarter. In the corresponding quarter, it posted a net profit of 53.1 crores. The company's revenue increased 35.8% to 237 crores as against 175 odd crores. Adani Wilmar is going to be in focus. The edible oil major has announced its acquisition of a 67% stake in Omkar Chemical Industries. So that is something that we'll watch out for. Vodafone Idea has received the shareholder approval to issue preferential shares to Nokia and Ericsson. Again, that stock will be in focus in trade today. So those are some of the stocks that I'm keeping a keen eye out on, Shell.
That, ladies and gentlemen, was the rundown of stocks that are in news. And now I'll request the PCR to fire the chart of the US 2000 Russell Index. This is something that you need to look at. And this is where, ladies and gentlemen, the shift has happened. Look at this chart and you'll see the kind of rally that we've seen in this index yesterday at a time when you've seen intense profit booking on the Nasdaq, 1.5%, 2% lower, Dow ending flat, and S&P closing in negative territory. So this is the shift that is happening in liquidity. Now the Russell 2000 index is made up of obviously 2000 companies which are heavily dependent on borrowing costs to increase their business, to increase their profitability. A drop in borrowing costs or interest rate essentially means that these companies will start to do better, and it is this change that is now getting reflected in Wall Street, that you have profit booking in the Magnificent 7 or the Magnificent 11 in the Nasdaq. The Dow and the S&P are also slipping a bit after fabulous rallies, and you have this move coming into Russell 2000. Remember, the all-time high of Russell 2000 is 2460, which we saw somewhere in November of 2021, and at the moment the index is at 2137. So this is the shift. Let us see whether this happens here or not, but this is something that we need to pay attention to. Now, what else is buzzing in trade? I just like to point out IREDA. This is the second quarter earnings that IREDA will be announcing today. I am requesting everybody to be very careful, because we've seen a very sharp rally coming into the IREDA stock. It's right there in front of you on the screen. From a IPO price of 32 rupees, which was about 8 months ago, the counter has appreciated to 283 rupees, which is about a 7.5% rally that has come in a span of 8 months. Earnings are today. Let us see how the earnings are. Of course, the buzz on the street is that expectations are very strong, but typically you see profit booking happening once news is out. Sakshi, anything that you have on brokerage radar?
Absolutely, Shail. So Jefferies, a lot of brokerage houses of course have come out with reports on TCS. So Jefferies is the first one that I'm tracking. It's upgraded the stock to buy with a target price of 46.15. Again, Citi has a sell call on TCS. It has a target price of 3,645, and Nomura has a neutral call, although they have raised the target price to 38.60 for the counter from about 3,800. So just a mild uptick from those. Nuvama has a buy call on TCS, and they have a bullish target of 4,800 from their initial target of 45.60. So they've raised the targets, and this is the most bullish target that we have on TCS post the results. Apart from this, UBS has upgraded Federal Bank, the upgrade to buy from neutral. They've also raised their target price to 250 from 180 rupees earlier. They also expect, the ROA accretion based re-rating aided by near-term catalyst, and they also see favorable risk reward, going forward from here. There is also clarity on new CEO and the visibility on future strategy, and that could be a re-rating candidate from the banking space for the brokerage firm. Apart from this, Investec has come out with a report on both Bharti Airtel and Bharti Hexa. On Bharti Airtel, they maintain a hold. They have revised the target price to 1560 on the upward side. On Bharti Hexa, they've initiated coverage with a buy rating and a target price of 1240. So we'll keep an eye out on both Bharti Hexa as well as Bharti Airtel. On Zomato, there is a UBS report. They have maintained a buy rating on the company and now have raised the target price to 260 rupees. Remember, the stock is hovering near all-time high levels as well. Apart from this, on the pharma space, Jefferies again has come out with a report. Their key takeaways from IQVIA US data for May and June suggest that they will be continuing to bet big on Sun Pharma, Biocon and Zydus as they show a strong performance going forward from here too. On Prestige, there is a Morgan Stanley report. It's maintained an overweight rating on the company with a target price of 1770. So those are some of the stocks that are on the brokerage house's radar, Shail.
And we'll be keeping an eye out on the auto space, Sakshi. There is a clarification that is likely to come in from Uttar Pradesh. Remember, just 2-3 days ago, the state government of Uttar Pradesh said that, or it was presumed by the market that registration costs on electric vehicles and hybrids would be removed, thereby making it a little less expensive to buy them. And then is the reason why you had seen a very sharp rally in Maruti at least. Well, now the clarification that is likely to come in is that not all vehicles in the EV and the hybrid space will be forgiven the registration costs in UP. It is only a select set of affordable electric vehicles and hybrids which might make the cut, and for companies such as Maruti and Toyota Kirloskar, which make larger and luxury SUVs in the EV and hybrid space, well, they may not make the cut. So keep an eye out on Maruti, keep an eye out on Mahindra and Mahindra as well. These two stocks just might sort of slip further in trade. Remember, after Tuesday's fantastic performance, Maruti slipped yesterday, and if you even look at how M&M is shaping up, it's still down 5.8% in the month of July's F&O series so far till 12th of July. So these are the two stocks that I have in mind, and of course HCL Tech. We'll keep an eye out on HCL Tech. This is the earnings boy today. The earnings will come in post markets close. HCL Tech is 3.7% higher in the F&O space in the month of July so far. We'll keep an eye out on Wipro, where the ADR has done some nice calisthenics, 4.3% higher so far in July's F&O expiry. And of course Infosys. Infosys will report earnings on July 18th post market close. So these are the 3 or 4 stocks that we'll keep an eye out on the muted performance of TCS's second quarter earnings. Sakshi.
Right, we'll just wait by for our guest to join in. Today we will be having Mr. Mayuresh Joshi joining in on our show, Head of Equity Research at William O'Neill India, to give us a sense of how should investors be really looking at the earnings that are coming through, and of course right ahead of the budget, the last week, what should be the key strategy right there. And of course, apart from this, Aditya Agarwal will be joining in a little later at 9 a.m. He's the Head of Derivatives and Technical Research at Sanctum Wealth. So we'll be speaking to him regarding the technicals, the strategies on both the indices, the Nifty and the Nifty Bank, and of course several other stocks that we will have to keep an eye out on as well. I think we'll also be looking at how the shipping stocks performed today. It was a blowout rally yesterday again, and several other stocks even below the surface came through. So stocks like Shipping Corporation of India, GE Shipping, those were the kind of stocks that were showing remarkable moves as of yesterday. Remember, we were all through previous weeks focused on 3 or 4 major shipbuilder stocks like Cochin, Mazagon, GRSE. Those were the stocks that were hogging all the limelight, but it's now the below surface, and those stocks are also coming into the fore and garnering all the attention. So that will be in focus. Railways again. RVNL, there has been a blowout rally, so whether that continues or not is going to be something that we will again focus on in today's trading action. We'll also have to see that beyond TCS, how the other IT space stocks also perform, just like how Shail pointed out, that the momentum will kick start now with all the other earnings coming through. So the IT space, especially the mid-cap ITs that have been better performers, how do they perform as well? That's also going to be an extremely key to watch out for. And like I said, of course, in the evening, the focus will shift to the macro data, the IIP and the CPI number. And in case that comes up as a strong one, we'll have to see whether the markets will take that as a positive trigger that the economy is doing well, the indicators for the macro economy are doing well, and therefore, continue to move up higher right ahead of the big bang event, the budget too. So that's the kind of move that we are expecting, and we are waiting by now for Mayuresh to join in, Shail.
Sakshi, another stock in focus will be ONGC in particular and the energy space in general. I am requesting the PCR to show the longest possible chart of ONGC for our viewers. There is a very, very interesting development which is in the offing. 304.75 is where we've seen a close, and Sakshi, the all-time high on ONGC is 314.55. This was seen in April of 2014. So 6 plus 4. It's a 10-year breakout that is pending on ONGC. Remember, this is India's largest explorer as far as the energy space is concerned. They are intensely cash rich. The stock is extremely undervalued relative to the broader market. and it's the energy theme which is now buzzing in the markets for two reasons. You have a new fund offer which has just concluded, and they are on a buying spree. Keep ONGC in mind. Once the breakout happens, you will see lots of interesting developments happening on the stock of ONGC. Remember, we have seen similar breakouts happening on NTPC. We've seen strong breakouts happening on Coal India when such 5, 7, 10-year zones were broken. Sakshi.
Right, and we'll also look at the auto space, like you said, Shail, M&M especially, because M&M has come out with more statements that they've actually sold more SUVs than it sold in June in June 2024. So there are growing signs of a mismatch that's happening. About Mahindra made about 7,248 more SUVs than it had sold in the last year. So sharp rally being seen in the SUVs. So that clearly is a signal that there is no slowdown as such which is being made out to be in the auto space as far and wide, but we'll have to see whether the slowdown is limited to the EV and the hybrid space, because that is where the incentives are actually coming in. Now, remember, the gap between production and sales of Mahindra Sports Utility Vehicle has widened in the past year. But then there is this entire growing demand supply mismatch. Now, whether this is spread across the industry is something that we will now keenly focus on in our comments with the top automakers of India too. So that's something that we will be looking at too in trade today, and we'll try to understand this from Mayuresh as well within the auto space as to whether there are any clear signs of a demand supply mismatch, or these are just signs that are in the interim. Companies are talking about celebratory price cuts that are happening and nothing of that sort, but we'll have to really look at how the sentiment is at the dealerships, because our reporters have also been highlighting rising inventory levels. So that is something that we need to watch out for. And of course, whether there are any signs of from the upcoming budget as an extended support too. We do have Mayuresh now with us. Mayuresh, very good morning. Thank you so much for taking the time out for this discussion. Well, the first of the earnings has kicked in for us. Tata Consultancy Services came out with the numbers yesterday. How did you read through the numbers? Has it met your own expectations? Now, of course, some of the numbers are ahead of the street estimates, like on the PAT figure or on the constant currency revenue in rupee terms figure is concerned. But again, there is no clarity from the company as far as they're not calling out any guidance, which again seems to indicate that there is an overhang of uncertainty in the macroeconomic environment. How are you reading through the TCS numbers? What will you do after the earnings on this space?
Morning, Sakshi. Morning, Shail sir. So two things. One, I think, as you rightly pointed out, it has been a mixed bag for TCS. And the environment in general, looking at how the commentary is being poised, seems to suggest that the recovery will also be a little bit back-ended. So to that extent, BFSI and the pain that might still persist, specifically in the American ecosystem and the European ecosystem as well, might take at least a couple of quarters to stabilize and recover. At the same time, what we're probably seeing in terms of some green shoots, as far as the overall economy and discretionary trends are concerned, which will get reflected through retail, manufacturing, in both these regions particularly, is also going to be back-ended. So to that extent, I think managements will be a little bit worried, specifically the large cap companies, in terms of how the first half might actually look out. And depending on that, I think the overall guidance on an annualized basis will get played out. Having said that, my own take is that TCS has hardly done anything over the last 6 months. It might still consolidate till we get further clarity in terms of some green shoots emerging for the key sectors that the large IT behemoths probably operate out of. Also, I think to note the point in terms of how the Accenture guidance was, it was relatively okay. So it was not a blockbuster guidance that they've given, which probably means that consumer discretionary spending and decision making is still getting delayed or is still getting back-ended as we head into the second half. So I think there will be a phase of consolidation, at least for the last 10-20 years.
Good morning, Mayuresh. All the right times to welcome Mr. Aditya Agarwal, Head of Derivatives and Technical Research at Sanctum Wealth. And Mayuresh, I noticed that the goatee is back. Did somebody else also point this out to you?
No. So I think when the markets were very, very volatile, I remembered you and I said I'll have to get the goatee back on.
बस अब इसको गांठ बांध के रख लीजिए जब तक निफ्टी 35,000 नहीं होता. Let's have the goatee where it is supposed to be. Sakshi and I were just chatting before market started. Instead of doing audio 1 2 3 4 audio check 1 2 3 4 1 2 3 4, we will say Nifty 25,000, 26,000, 27,000. That's how the universe will hear us.
In fact,
Aditya Agarwal joins us, Head of Derivatives and Technical Research. Tell me. I know what you're telling me. I've seen that.
So before the Berkshire Hathaway, Warren Buffett asked for mic testing, he said 1 million, 2 million, 3 million.
Where do you think I got this idea from? Okay, Aditya is with us. Aditya, two stocks that look good to you. Ladies and gentlemen, the Nifty is opened with a 55-point uptick in pre-open at 24,366. Over to you, Aditya. This is a running joke between Sakshi, me and Mayuresh on the goatee, and I see that you have one as well. So Nifty or Sensex or Bank Nifty, Surakshit hai. Your view on two stocks that might outperform?
Morning, Shail. Well, on our overall view on markets is positive. I mean, last 3-4 days we are seeing some consolidation, but I think if there is some dip, it can be used as a buying opportunity. We are bullish on HDFC Bank from these levels. I mean, if we see HDFC Bank, it has retraced almost 50% of the overall rally which it saw from the lows of May till the highs of July. So at current juncture, if we see, then risk reward ratio is clearly in favor of HDFC Bank buyers. So it can be bought at current levels with a stop loss of 1595. On higher side, I'm expecting it may move towards 1700 to 1720 levels in next few trading sessions. Another stock will be from IT Pack, L&T Mindtree. If we see this stock also means for last few days, this stock was performing, some profit booking was seen in last 2-3 trading sessions. But structure-wise, stock is good. It is finding strong support in the zone of 5300, 5320. And yesterday we saw some good buying from those levels. So I'm expecting this stock may again outperform. It may move towards 5540 to 5570. So again, L&T Mindtree can be bought at current levels with a stop loss of 5340, with target of 5520 to 5550.
Fair point. Let's look at some prices that have opened in pre-open. HDFC Bank, 8 rupees higher, 1629. Reliance, 7 rupees 70 higher, 3169. ITC flat, Infosys flat, and TCS. This is the earnings boy, muted, 9 rupees higher, 39.33. A very quick detour into FNO, and then we'll look at some other prices. Let me see cash first. Stunning set of numbers by Anand Rathi Wealth, 4% higher, 43.25. Raymond, this is the demerged business now, 5% higher, 21.01. There is news from Z Entertainment that they'll be raising funds via equity, now up 1%. There's no stopping Garden Reach, 3% higher, 26.75. Let's look at what's happening in terms of volume. Nothing much here. Maruti is flat, that's thankfully good, and Coforge is 1.1% lower. Let's get back to our panel and discuss what's happening in the markets. Mayuresh, to you, 6 sessions left in the budget. What are you telling clients, and what are you doing personally in your own portfolio?
So not much because of compliances on the personal front, but what we're really liking in terms of how the budget will get poised, I think out of all the elements in terms of infrastructure, manufacturing, capex, I think those themes will continue. You will see accelerated capex happening on housing. I think the Prime Minister has made statements immediately after the elections. And therefore, I think all these sectors which need the capital boost, I think that will continue. Roads, highways, defense, ports. rural affordable housing, infra, manufacturing. Having said that, we are a little bit more sanguine in terms of domestic cyclicals at this juncture. And therefore, I think not too many changes that we've probably done in terms of our research ideations. Pennar Industries is still something that we feel can be a good proxy in terms of the entire infra manufacturing space. They've just inaugurated a new pre-engineering building plant a few days back. A large part of their pre-engineered building order book is building up quite nicely as we speak. They've got a decent order book on the domestic front. They've got a decent order book in terms of their ascent business in the US market as well. And the other parts of their businesses that they also probably cater to in terms of railways, in terms of infrastructure growth, in terms of power. I think all those segments will contribute significantly. The management is very, very hopeful that the EBIT margins on a consolidated basis that they posted around 5 odd percent should expand by 200 to 250 odd bips in the next year, year and a half, which will be a significant uptick both in terms of EBITDA margin as well as the EBIT front on both lines of businesses as are concerned. So my take is that it's a very good proxy in terms of how the infra story will play out. We've spoken a lot in terms of how autos are positioned, what has probably happened in terms of price cuts. But our take still remains that auto ancillaries might still benefit, both in terms of the OEMs, in terms of the electrical mobility platforms and the orders that a lot of auto companies are winning, as well as the replacement market, where both the pricing element as well as demand remains extremely strong. Having said that, I think Varroc engineering is something that we still like as our focus ideas at Markets with India. The EV wins that Varroc engineering has had in the last year out of 8,500 crores, almost 40%. These are high margin orders, and therefore, as they execute well over the next year, year and a half, specifically in this line and subsegment of the business, the margin should show a significant uptake. So in quarter four, they had shown a margin of 11 odd percent, consolidated margins for the year at 10%. This should show an uptick as they execute more on the EV side of the business. Debt equity has come up quite significantly year on year. It is now at 0.63. And the management believes that they can get it down even further in the next few quarters, which can be a huge positive as far as cash flow is concerned. So I think auto ancillaries and infra storage is something that we still believe can do well. Pennar Industries and Varroc is something we like. We believe there is a good potential of an 18 to 20% upside on those stocks.
Okay, we'll focus on all these stocks, but it's the IT space that clearly is going to be the flavor of the day. It seems beyond the large cap IT names, TCS, Infosys, Tech Mahindra, we also have momentum coming in on Coforge, Persistent Systems, LTTS as well. The entire space seems to be buzzing. Emphasis to sharp uptick can be seen across the board. Aditya, first to you. Where do you think investors should focus on since this space now comes to be in the limelight? Will it be the large caps or the mid cap names that you will bet big on?
Well, I think it will be more of mid-cap counters, which can see a move up, a sharp up move as compared to large cap. See, overall, if we see IT index, it's looking positive. I think that IT index is going to move, going towards new highs, and once it breaks that, then we can see another 3 to 4% up move in IT index. But if you see percentage-wise return, I think from these levels, mid-cap stocks are still mid-cap IT counters are still looking better. A stock like Persistent means it has seen a sharp rally from 2,800 to 4,800, but it still means stock is quite attractive at current levels. Also means we are quite bullish on this counter with a stop loss of, if someone has to take a positional call with a stop loss of 4,500, one can buy with target of 5,100, 5,200. Among large cap counters means I think HCL Tech is one stock which can outperform from these levels. Means this stock has comparatively underperformed the whole large cap IT pack. We are seeing some consolidation, but overall I am expecting that this stock may move towards 1640, 1650 eventually in next few trading sessions. So both these stocks, HCL Tech from large cap counters and Persistent from mid cap looks positive.
Okay, got that. Mayuresh, to you, within the IT pack, what is your order of preference in terms of the stocks that you will be looking at? And of course, a lot will also depend on the earnings, but before those?
No, so mid-cap IT might still outperform Sakshi. I think it's merely because of the order wins that these companies operate out of, typically between 5 to 10 odd million, which has largely not got affected if you go by the management commentaries as far as Q4 was concerned. Now, a large part of the cost increases that happened in terms of outsourcing are largely now getting gestated. Q1, Q2 will typically see wage hikes, etc., being played out for the sector
Yeah.
as a whole. But I think a lot of normalization in terms of the annualized margins are largely now getting factored in. So order flow should continue as per management commentary. Dollar revenue, constant currency revenue should remain stable. Margins should be relatively stable on a sequential basis as well. Albeit some adjustments as wage hikes happens in either Q1, Q2 for respective companies. Valuations, yes, a tad bit on the higher side as far as the mid cap pack is concerned, trading way above pivot levels as we see. But we continue holding stocks like a Persistent in our global portfolios, something like a KPIT Tech in our global portfolios. But the disclaimer is that we hold these stocks from way lower levels. So the stocks can do well, but we have certain hold recommendations as far as the mid cap pack is concerned.
Okay, the pre-open seems to have settled, and yes, Shail.
I think Mayuresh and I remember discussing KPIT somewhere between 250 and 350, and we used to wonder कि इतनी बढ़िया auto IT software
Focus
company है, why are people not paying attention? At the same point of time, Birla Soft was maybe 80-90 rupees, now 700, KPIT beyond 1700. So those were the glorious days of stock picking. अब तो बस देख के ही prices दिल में कुछ होने लगता है कि ये कुछ ज़्यादा ही हो गया. Sakshi, shipping corporation 20% higher yesterday. It's opening with a gap up of 5% and at obviously a record high 347.80. So keep an eye out on all these volatile stocks. Please be extremely cautious if you are new into the market. This is not a time to enter even if you have the biggest feeling of missing out on this rally. Let's wait for the budget to come in and for prices to probably stabilize at sensible levels. Nifty settled 72 points higher. The Nifty IT index is going to have a blowout today. 584, 1.5% higher. Let's look at what's contributing to that rally. 51 rupees higher on TCS, 39.75. Infosys 22 rupees higher, 16.75. What is HCL Tech doing? Because that's the earnings boy for today. And let's look at Wipro. There were both jumps in ADR as far as prices were concerned. Wipro 2% higher, and of course you have HCL Tech 1.2% higher. Infosys declares on July 18th, HCL Tech today evening. Aditya, coming to you. Within the IT space, what looks good? Remember, this is beaten down, under-owned and underappreciated.
Well, means we remain bullish on HCL Tech. Means L&T Mindtree, we have already given a buy call. Similarly, HCL Tech remains positive. Means it has underperformed the whole IT pack. If we see, it is in consolidation zone. Now we are seeing some sign of buying in this counter. So I'm expecting it may move towards 1640, 1650 next few trading sessions. So at current juncture also it can be bought with a stop loss of 1480, 1495 with target of 1620 to 1650.
Space, I also wanted to ask Mayuresh, just like how we were looking at that this current market has run up too sharp and too fast, but IT space after a long haul may be showing signs of an uptake. Would you think, Mayuresh, that it is advisable for investors to pull out cash or book profits in some of the runaway sectors like defense, railways, PSUs, and probably deploy some of that into spaces like IT, pharma, FMCG, and IT more so?
So, Sakshi, yes, I think partial profit booking is going to do no harm, and you have to do that in your portfolios because the run-up has been too sharp. The valuations are way too expensive at this juncture, and though they might have a lot of tailwinds, you will obviously see some element in terms of markets reacting to both valuations and price action. So yes, I think some partial profit booking, some part of that getting parked into domestic cyclicals, as I mentioned, some part getting parked into pharma is also not a bad bet. Obviously, I think FMCG companies, apart from the updates that we've received from Dabur, Marico and Godrej Consumer, I think a large part, in my opinion, might still have a very soft and subdued Q1. as monsoons progress, I think the genuine recovery will start coming in the second half. But I think the markets will start factoring that in. So yeah, being a little bit more selective in FMCG as far as the overall consumer discretionary space is concerned is also not a bad idea. Yeah, so I think a little bit of churning is not going to do anything.
Okay. And since you were discussing KPIT Tech also, Mahresh, with Shell, I wanted to bring up two more stocks, Tata Elxsi and Tata Technologies. Recently, we saw the update coming in from Tata Elxsi, again, a mild on the negative side. And Tata Technologies has just been an underperformer right from the day, it got listed and after that. So many investors are feeling stuck here. How would you advise investors to go about these two stocks?
You could probably look at a comparison check between KPIT and Tata Elxsi. They probably work in the same space in terms of ER&D. If you draw a chart over the last 1.5 to 2 years, KPIT has outperformed Tata Elxsi by a huge margin. But if you draw a longer term chart over the last 4 years, I think Tata Elxsi has not done a bad job itself. It's underperformed in the last few quarters in terms of expectation on numbers and in comparison of how KPIT is probably delivering numbers. But let's also understand that even at the current juncture, Tata Elxsi is trading almost at 50 odd times. KPIT is nowhere cheap as well, as I put forth this argument for Tata Elxsi. But I think the entire thesis out here is that the R&D will continue in terms of more content per car getting delivered by not just the Indian EV makers, but global EV makers as well. And to that extent, there is sufficient amount of runaway growth that can still continue for these companies. How they execute and how well do they position their balance sheet in terms of execution is going to be key. Tata Elxsi's numbers were okay. Their guidance was relatively better, in my opinion. And therefore, I think anybody holding these stocks should continue holding. I think the clear disclaimer again is that KPIT is something we hold in a global portfolio, but at way lower.
Right, the markets are upon us, ladies and gentlemen. 66 points higher on the Nifty 50 and 600 points higher on the Nifty IT. Let's look at what's driving this. TCS, 100 rupees higher, 4021. The market's really appreciating earnings. 19 rupees higher on Infosys, 1673. This is a very strong move coming into the entire IT pack. Let's look at what HCL Tech is doing. Let's look at what Emphasis is doing. 5% higher, 2702 as far as Emphasis is concerned. L&T Mindtree, 2.2% higher, 5528. Persistent taking it away, 2.5% higher, 4735. A strong move coming on to Coforge, 2.7% higher, 5722. So it's IT all the way as far as prices are concerned. A strong move coming across the board. Wipro 2.3% higher. HCL Tech taking it away 0.5% higher. Remember, this is the earnings boy today. 1521. Strength on Nifty IT 700 points higher. 38,015. We'll forget everything else. Aditya, anything that you want to do in the IT space immediately and catch hold of this rally? What looks good? TCS 102 points higher. 4025.
Well, I will buy TCS at these levels. Means already means LTI Mindtree is up by 2.5%. So TCS can be bought. This stock has not done anything. It is trading in a range of 3,700, 4,000 for last couple of weeks now. So I think from these levels, TCS may also see some good buying interest. It may move towards 4,200, 4,250 in next few weeks. It will take some time, but yes, positional perspective, TCS looks better.
Fine, 2.5% higher. India's top traded counter at the moment on national NSE 500, 315 crores worth of transactions done. This is looking good. What else is buzzing? SGVN 2% higher, 153.9. RVNL profit booking, mild profit booking, 1% lower, 623, still among the top traded. Mazgaon Dock, NHPC, Cochin Shipyard, mild bout of profit to booking, but still in the top traded counters. IRFC flat. Geo Finance is clicking 2% higher, 354.55. Hudco 1% higher. Maruti down 1.7%. Clarifications coming in from the state of UP on how the registration fee of EV vehicles will be forgiven. Okay. What's showing strength? Oil India 3.7% higher, 571. Apart from TCS, anything else that catches your fancy, Mayuresh?
So, Shalsar, I think mid-cap IT is something that might still continue its momentum. And therefore, I think the expectation largely that is getting penciled in is that mid-cap IT might still outperform the large-cap peers in terms of earnings pedigree. So I think persistent is something that I'll still keep on my radar. I think this is one stock that can do well. And let's not forget Sonata Software as well.
Okay, got that. Strong moves that can be seen within the broader markets. Shipping Corporation of India now 12.5% higher. No let up right there after 20% circuit yesterday. And Irida, right ahead of the earnings, is up by 3.5% in trade. A very strong move that can be seen on this one to 293 right now for the stock. Remember, we will continue to keep an eye out on the earnings too. LT Foods, which has a new facility in the UK now, 4.4% higher for this stock. 292 levels can be seen on this one. And HPL Electric, a very strong buzz, about 14% higher for this one as well. Anand Rathi is reacting positively to the numbers, 1.8% higher in trade. Raymond, there is no stopping, 5% higher for this one again in trade. It has been a consistent buzz on this. Let's understand from Aditya first, and then we will get Mayuresh also to give their fundamental view. Raymond and Shipping Corporation of India.
Sakshi, shipping corporation, I will definitely avoid at these levels. Stock has already seen a sharp up move of almost 30 to 32% in last two trading sessions. So this is not a time to enter into this counter. Yes, if someone is holding, they can continue to hold with a stop loss of 320, but definitely not a fresh buy at these levels. Raymond's means I won't be able to comment at these levels because the chart has distorted and because of this demerger. So it will take some time for the chart to adjust. So right now I won't be able to comment on Raymond.
Okay, we'll take Mayuresh's commentary on Raymond. After the readjustment on the demerger, how are you really looking at the stock now?
I think when the news broke out last week, Sakshi, I think we maintained a positive stance, still maintaining the same, because I think what's really happening in the real estate space and the domain that it operates out of, specifically of the pockets that it operates out of, I think it's been a very strong show on what we are getting in terms of numbers. And therefore, I think outside the real estate business, as they've divested the FMCG business a few quarters back, the balance sheet remains cash rich. The couple of aspects on their auto ancillary business, they still remain at a market leadership position. And therefore, the lifestyle and the branded business should continue doing well for him. But obviously, valuations are through the roof. It's trading way above pivot levels. So I think anybody holding can continue holding, but have your risk management tools in place. It's as simple as that for any of these stocks that are.
Okay, got that. Oil India is, there's a blowout there, about 5.7% higher now. The stock is moving up very sharply in trade today, and the oil and gas index is up by about 0.4% odd. Let's get in Aditya to talk about Oil India.
Well, definitely a very strong structure means we are seeing a one-side rally in this counter, and any dip is being important too. So overall means we are bullish on this counter, but on some dip one means I would recommend to buy this. And if we see this week itself, it is up by 20%. So if it comes in the zone of 560, 555, that's a good level to re-enter into long position. We are expecting target of 610 to 615, not a very big target, at least in the short term in this counter. But comparatively, if we see ONGC, this stock looks much better, means as compared to means Oil India in terms of risk reward. After a big consolidation, we have seen a breakout in ONGC, which came around 288 to 90 levels, and from those levels we are seeing a steady rally. So I'm expecting that ONGC may outperform Oil India in short to medium term perspective. It may move towards 335, 340 in next few sessions. So I would recommend to buy ONGC over Oil India at current levels.
Fine, Sakshi, I think it's the railway pack that's taking it away. Unbelievable rallies continue. You have a strong move coming into RailTel, 5.2% higher, 547. IRCON 3.5% higher, 331. IRFC 2.5% higher, 212. RVNL 1.3% higher, 638. Rights 1.5% higher. It's just buzzing with gains across the board. And let's look at the other railway ancillaries. Kernex, they make the Kavach anti-collision device, 5% higher, limit up 464. Ori Rail, 5% higher, limit up 397. So this is a theme that refuses to die down, and a very strong move that is coming into this one. I'd just like to mark the volume on TCS. This is showing a lot of strength at this point of time. Already on TCS, about 68% of 5-day volume is traded, which is 16.6 lakh shares. The counter 2.5% higher, and of course Anand Rathi, strong move coming in. What's also buzzing is the entire energy space. Sakshi has marked Oil India. We look at Gas Authority trading at 231, about 0.7% higher. There is a strong move coming into Adani Green and Adani Solutions. So this is something that needs to be looked into. Coming to you, Aditya, Gas Authority 232. Remember the PSU theme, remember low ticket, high beta items. What are the charts of Gas Authority telling you?
Well, again, a very strong counter. Means in this stock also we have seen a big move, and now after long consolidation, means the stock is giving up. It has already given a breakout above 230 levels. So I think it may consolidate for a few days, but structure looks very positive. I'm expecting that this stock may move towards 245, 250 next few days. So at current levels also, it's a good buy with a stop loss of 226. One can buy with target of 245 to 250.
Okay, I got that. Let's again look at some other counters then. LT Foods, there is no let up. I think there is a very sharp rally there, a 5.5% higher for this one. In the broader market space, you also have some stocks making a comeback really. Sadbhav Engineering 5% higher, Azad Engineering up. You have HMT that's up. You also have stocks like GPT Infra that's been buzzing. Some of these stocks are buzzing, but within the F&O space, it's clearly the IT space that's been ruling the roost. Emphasis, Info Edge also now coming to the fore. There is also a Shriram Transport Finance, Crompton Greaves Consumer also pulling up in trade beyond the IT makers. So those are some of the interesting names, and even PVR Inox, that's also buzzing a bit. Aditya, to you, anything that catches your attention within the F&O space that you would like to carry on the trade in?
Well, Shriram Finance is one stock which can be looked into. Means if we see here, Shriram Finance, last 7-8 days, stock has seen a correction from 3,000, it came to 2,700. Now again, we are seeing some pullback. Today, stock has already added 1% shares in open interest, which is on long side. So I think this stock may again move towards 28.90 to 29.20 levels. So at current levels also, long positions can be added with a stop loss of 27.80. PBR is another stock. Means if we see this counter, it has not done anything in long-term perspective. In fact, it has corrected only. And now we are seeing some, means if we see this stock, every dip is into bought into now. So I think if we are looking for medium-term perspective, it can be a good stock. On higher side, 1650, 1680 can be the target. With a stop loss of 1420, again, for medium-term perspective, one can buy with target of 1650 to 1680.
Okay. Mayuresh, I wanted to discuss with you the renewable energy finance makers. IRIDA firstly, and of course REC PFC, there is no letup there. How are you navigating through all these three names after the recent run-up?
I think existing investors can hold again. I think have your risk management tools in place, but the tailwinds continue. So I think the renewable energy space in general, there should be significant capacity additions over the next few years. There will be some kind of a budgetary announcement surrounding this space as well. I'm pretty sure about that. And if you are about to meet those targets of 500 gigawatts of renewable energy from 180, 190 that we have at this current juncture, overall, solar, hydro, wind combined together, more focus on solar over the next few years. I think financiers are going to take the limelight because a large part of this additions is going to be led by the government itself and some private capex as well. But to that extent, financiers will probably have a say in terms of the additions that happens and the credit financing that is required. Since a large part of those entities will be government owned, I think the net NPA situation probably might not crop up again. They've cleaned up their balance sheets quite significantly. And to that extent, I think there is sufficient amount of growth and headroom for earnings expansion. It's how well these companies execute. I think it's as simple as that.
Okay. Aditya, would you come in on IREDA?
Well, means again, IRDA has seen a big move in last 2 days from 240 to 295, 296 levels. But yes, the structure is positive. Means stock has after big consolidation in last 2 weeks, we have seen a big move. So again, means risk reward is clearly not in favor of buyers at these levels. If someone is looking for short-term perspective, if it comes down 260, it's a good buy with a stop loss of 238, target of 320, 330. But at current levels, I would like to avoid this stock.
There's a blowout on the Nifty, ladies and gentlemen, driven primarily by the tech stocks, 24,427. And with this breakout, two things will happen. One, you will see a short covering on the Nifty because there was a lot of resistance on Nifty option chain at 24,400. You will see call unwinding at 24,500 as well. Let's look at stocks that are contributing to this uptick. TCS 25 points, Infosys 19 points, Reliance is in the green. Remember, this is the heaviest weighted counter, as is also Infosys. Now 9 rupees high, 9 points. And I also wanted to see what ICICI Bank is doing. Actually, we are not paying the due attention and the due respect to ICICI Bank, which is at a record high. The loan banking stock at record high, 1239 for you, about a rupee higher. Okay, we'll keep it in mind. What's pulling the index down? Okay, no surprise here, Maruti. 5 points negative as far as the index is concerned. ITC mild profit booking contributing 2 points to the downtick. Nothing at the moment which seems to be worrisome on the index. Let's do a broader market check. Very strong advanced decline. 1650 stocks in the green, 500 in the red. We tracked 19 indices for you. All 19 are in the green. We'll just ignore the FMCG index. It will also come in the green. Which is leading the rally? Well, IT 1.5% higher. All 10 stocks in the index are in the green. The small cap index 0.6% higher. 80 out of 100 stocks in the green. NSE 500, 347 stocks in the green. Index up 0.5%. Coming to you, Aditya, does it make sense to buy the 24,400 Nifty call, or would you be a little hesitant ahead of the weekend?
Well, I would avoid right now. Means if we see this 24,400, 24,500, this 100 points band is a very strong resistance band for Nifty. And continuously we are seeing some profit booking in this band for last couple of days. So I think one can wait for some time, let this Nifty break 25,500. After that, we will again see a 250 to 300 points kind of move. But I think ahead of weekend, one can avoid. As next weekend, again, we have a holiday. So premium decay will be much faster. So I would avoid to buy 24,400 call at these levels.
Fantastic view given. We are ahead of the weekend and Wednesday is a holiday. So option data theta decay will be phenomenal. A new high, Mayuresh. I'm sure it's the GOTI which is prompting the Nifty to move beyond 24,400. Are you comfortable with these numbers, especially on the large cap? What do you think is the PE ratio at this point of time for Nifty? And are these sensible valuations to look at?
I think two ways to answer that question, Shail sir. I think if you look at a earnings construct, and once the budget is out of the way, markets will revert back to how earnings are positioned, and a base case scenario getting worked out is a 12 to 14% growth. Now, surprisingly, I read a Motilal note day before yesterday. From 19 to 23 till last year, the earnings growth has mirrored the increase in market cap as well. Those were very interesting observations that Gautam has put down in his tweet and in terms of the note that Motilal has come out, which probably means that if one really expects earnings over the next couple of years to grow in that 12 to 14% band, you're probably looking the Nifty EPS to be close to around 1250, 1275, 1300 in that range. Now, the average forward multiples that the market has been 16 times on the downside, around 23 times on the higher end of the frame. If you probably assume this figure and earnings growing at that pace, if that is something that one works out at, Nifty probably trades around 20.5 times forward earnings. And therefore, it's not too expensive, it's not too cheap. It's right in the mid-premium valuations, as you call it. But I think out of all the nations that we are probably tracking at O'Neill, very few nations are coming close in terms of the delivery, both on a macro and a micro front. And therefore, these mid-premium valuations might persist.
Okay, got that. Within the F&O space, let me also pull up one stock which is Chambal Fertilizers that is gaining traction. 2.7% had a higher trade in trade today. I just wanted to ask you the recent buzz that we saw in the entire fertilizers and the chemicals pack. Where did you take bullish bets, and where would you continue to accumulate some of these stocks?
Well, if we see Chambal fertilizer, means in among fertilizer pack, we can see a trading pullback in this stock towards 545, 550. But I am not expecting a very big up move in this stock, at least from this budget perspective. Means stock has already seen a big move, and after that, stock is in a little bit of consolidation zone. So I would avoid. Means if you're looking for 4-5% kind of move, yes, Chambal fertilizer can be looked into with a target of 540 to 550. But if we see more of chemical basket, then we are more bullish on chemical basket, Navin Fluoro, SRF. Both these stocks, from medium term perspective, are looking extremely positive. Means we are expecting that Navin Fluoro higher side can move towards 3,950 to 4,200 levels. Similarly, SRF, we are quite bullish for targets of 2,700 to 2,850. So means we are more bullish on chemicals from these levels from short to medium term perspective.
Okay. And where are you also keeping an eye out on within the finance space? A lot of these counters are coming back to the fore. Shriram Transport Finance coming back 3.9% higher within the F&O space. It's the top moving counter there. It was IFL Finance yesterday. Any NBFC makers that are on your radar as well?
We are bullish on Shriram Finance. Means after a big correction of almost 10%, now stock is showing sign of reversal. As we discussed, means with some time before that, I'm expecting that Shriram Finance may move towards 2920 to 2950 levels. So again, from trading perspective, one can buy. We can see some 4 to 5% upside in this counter.
Got it. Let's get in Mayuresh into the conversation. Mayuresh, beyond IT within the earnings space, which are the sectors that you believe can come out with some outperformance in Q1, and where do you think there can be underperformance now?
My take, Sakshi, is that domestic cyclicals will still continue doing well. They will still continue executing well. So section of capital goods might still continue, albeit I think price action has been very, very sharp. But you're probably expected to see defense stocks. I think this entire PSU basket still expected to continue delivering well as far as earnings is concerned. BFSI selectively might do well because there will be still pockets where deposit growth, the expectations in terms of NIMs will still suppressed, might still come to the fore. So selective BFSI stocks might continue doing well. Leaving aside a few of the updates from FMCG companies might still have a tough quarter, in my opinion. Auto ancillaries should continue delivering well in terms of Q1. Therefore, I think a lot of these domestic-facing counters should continue doing well. Mid-cap IT relatively should be a tad bit better as far as earnings go compared to the large-cap names.
Okay. Mayuresh, what I was asking Aditya also, the fertilizer, the chemical space, what's your own sense here? They're again trading near the day's high point. Most of these stocks, RCF, NFL, Chambal Fact. Is this space giving you confidence? RCF is up 8% again today.
No, so I think as far as fertilizers is concerned, I think with good monsoons coming through, the expectation is that the output or the offtake will be significantly better. Now, if you probably look at the farm gate prices for most fertilizers, whether you're talking about NPK or that, let's leave aside urea for the time being. I think they should probably be doing relatively better as far as the farm gate prices are concerned. Now, if you probably look at input costs, whether ammonia or phosphoric acid, some of these companies have a large part of integration that has already been done. So to that extent, I think the margin expansion with expected volume growth should be relatively better, and it gives them a good base in terms of how the winter crop will also move in over the next couple of quarters, assuming good rainfall and reservoir level building up. So to that extent, I think fertilizer stocks moving higher, the kind of subsidy that might get announced in the budget and what happens with the direct transfer in terms of DBT might also have a significant impact in terms of their working capital flow. So I think it's more momentum in terms of expectations going forward and some tailwinds as well. For specialty chemicals, and we've discussed this, I think you need to probably distinguish between specialty chemicals, commodity plays. Agrochemical prices have moved very, very sharply, actually, in the last few weeks. But for the specialty chemical domain, the PLI scheme, China plus one, backward integration, prices moving back, the destocking, which had happened, restocking, which might start taking place, might have an impetus in terms of how price action probably moves. So focus on the specialty players. What we're keeping on a watch list is stocks like an Anupam Rasayan, stocks like an Any Organics, and a few of these agrochemicals and fertilizers have already shown good moves.
Okay, 9:40, ladies and gentlemen. Now, we'll just take a pause on stock picking here and just sit back and take a view from Mayuresh. Mayuresh, June saw 40,000 crore rupees coming into mutual funds. SIPs are now at 21,200 on a monthly basis, a record high. And of course, there is no let up in our AMC friends launching NFOs and collecting thousands and thousands of crore rupees, plus ultra HNIs, plus cash retail. All put together, maybe 55 to 60,000 crore rupees coming into the market each month. This is just distorting how markets work, because none of the dips are getting accelerated towards moving averages which are lower, and it causes sort of a disturbance in how expectations are shaping up. How are you looking at this huge inflow of cash into the market on a regular basis?
So, Shail sir, I think the point that you've raised is extremely pertinent, and therefore I think the kind of returns that new investors have probably made in the market in the last year and a half, if they try to extrapolate that every year they'll probably get the same amount of return, that's probably not going to happen. So I think one really must get their insights that the markets is not something which will be a guaranteed mechanism in terms of making those kinds of returns that have happened in the last year or year and a half. The second aspect is the kind of money that is flowing into the market. Obviously, one must realize that the kind of euphoria that you're probably seeing in certain broad pockets of the market is liquidity driven. There is no two ways about it. Now, this has to be clearly backed up, as I'm saying, with solid earnings growth. If earnings growth does not come through on the higher base that has got created post-COVID in the last 2 financial years, you might see some element of disappointment in some key pockets. And therefore, in terms of the overall earnings that the market from the index perspective will give. The third element obviously is in terms of the market return itself, right? Over the last 2 years, if you map out how the index has played out, there has hardly been a correction which has been more than 5% for the overall index. Even the June 4th correction was quickly bought into because of the kind of liquidity that the market probably has at this juncture. So investors must realize, sir, that on a longer term basis, you should normalize your return expectations. There are a lot of factors at play that happen for the markets, macros, micros. And therefore, to that extent, a linear move in the market is not possible. You will have bouts of volatility. And therefore, keeping your expectations in check also become important. One last point, from an equity ownership perspective, it's only 4% as we speak. A large part of savings as far as India goes is blocked in terms of real estate at 50% in terms of our net savings, around 17% in FDs, 17% in gold. As people realize the long-term wealth creation process that markets will give, and as this shift happens gradually, which will continue over the next few quarters and years, markets will seemingly do well, but moderate your return expectations from equity markets in general.
Okay, got that. Let's again look at some other opportunities. Aditya, Info Edge for you, it's ticking higher. How would you look at the counter? Is there a momentum that one should look to chase here?
Well, yes, means Info Edge, if we see for last few days, it was in consolidation zone. Some correction was seen in the counter in the last two trading sessions. But at current levels, also it's a good buy. Means if someone is looking for slightly means medium term perspective, it may move towards 7250 to 7300 levels. So at current levels, also it's not a means it's a good buy with a stop loss of 6700, target of 7200 to 7250.
Okay, got that. So that's info edge for you. At this current moment, it is ticking higher, 3.5% up within the F&O space. Let's again look at the broader markets. Mid caps, of course, hovering at record high levels. The action continues in small caps as well. Several stocks that are ticking higher within this space. So beyond the shipping and IT space, stocks like JB Chemicals, Pharma, Tejas Networks, Credit Access, Grameen, IFL Finance, Wellspun Living, CDSL again. Those are the counters that are showing us some moves. Let's get in Mayuresh to comment on CDSL per se. With the kind of bonus opportunity that investors got, the stock ticking higher again, how would you really look at these capital markets related stocks, BSE, CDSL making a comeback after a long haul?
Yeah, I think the stock reacted and now it's come off. Now, what is clearly happening, Sakshi, here is the regulatory changes which are now happening in the landscape. So, what probably comes through in terms of what we are hearing in terms of news reports, right? The white paper that has got circulated in terms of the F&O transactions, the retail probably losing a lot of money, whether there will be some increase in terms of how the taxability angle is also looked at, and whether that can create an impact in terms of the overall volumes. And therefore, the reactions are probably very, very obvious. Again, the expectations in terms of how the transaction charges are levied, specifically by discount brokers, the outcome thereof in terms of how numbers will play out. I think there are a whole host of changes that are probably happening at this juncture as we speak. All these stocks have significantly run up in terms of all the tailwinds that they probably had in terms of Demat account additions, in terms of volumes that were just compounding at a ferocious pace. But I think it's time to take a breather for these stocks. I think with all the developments taking place, I think these stocks will take a breather at this juncture. They might consolidate and see how these developments take place on the market. So, no actionables per se, as far as William O'Neill is concerned, for any of these plays at this moment. Let's see what kind of changes, regulatory as well as earnings, happen on numbers. So, we'll be more comfortable in terms of how the numbers stack up, and then probably look at a few of these stocks as Q1 numbers come.
Mayuresh, before we let you go, and Aditya, this is a question also for you. How do you see, this setup that SEBI has in mind in terms of curbing excessive derivative trading? Both of you are from brokerages, of course. Mayuresh is unlisted, but Aditya, you are feeling the pain as far as overall prices of brokerage stocks are concerned. Mayuresh, first to you. Is this a step in the right direction? And if yes, what do you think will happen to the lofty valuations that brokerages in the listed space enjoy?
No, so Shail sir, genuinely, I think the kind of disparity that was going through in terms of how charges were getting levied, I think there will be some element of uniformity that will now start taking place. I was speaking to a few of my friends who lead broking firms as well, and they are of the opinion that there will be pain as far as numbers are concerned. So if the mechanism comes into or gets rolled out, you will see a earnings hit as far as that is concerned. And therefore, I think SEBI's role in terms of protecting retail investors steps in the right direction. We've obviously seen a lot of data points, Shail sir, where F&O traders are losing 90%. In fact, I've seen a lot of tweets from my CA friends as well. That probably come when the time for income tax returns. A lot of their clients are coming in and showing that they have got huge F&O losses as well. So yeah, I think step in the right direction, in my opinion. How do you take this forward in a very structured way is something that the regulator might need to do.
Okay. Aditya, would you want to step in as far as your views on this part of the regulatory framework are concerned?
Well, I agree with Mitesh. The step is in the right direction. See, it may initially, if this lot size increase come, it may initially impact the volume. And yes, many of these small retail players will be out of the market, at least from the F&O side, and they will focus more on the on the cash market side. So impact will be there on volume side, but direction is on the right side if this happens. And also, if we see that NSE has also reduced the number of stocks which can be accepted as margin, that that will also impact the volume, as means leverage will reduce a bit on both on F&O side and the MTF side. So this will definitely impact the volumes, overall volumes for the market, at least for the short-term perspective. But let's see how it plays out in the long term.
Fair point. With that, ladies and gentlemen, we'll thank both Mayuresh and Aditya for this lovely conversation. And Mayuresh, thank you for the goatee. I'm sure the markets will appreciate and rise dramatically from current levels. We leave you, ladies and gentlemen, with a 100-point uptick on the Nifty. 24,400 is safely with the bulls. Let's now look at 24,500, and the rally is fed by a very strong uptick on IT stocks, in particular TCS, after a fantastic second quarter performance. The counter's up 100 rupees. The Nifty IT index in turn is up almost 2%, 734 points, 38,073 for you. Across the board in IT, you have strong gains. HCL Tech will report numbers today. Wipro's ADR shot up on New York Stock Exchange yesterday. Emphasis, L&T Mindtree, Coforge, Persistent. Across the board, you see a very strong set of buying. We'll wrap the show at the moment at 9:50 and remain glued on Business Today television. There's lots coming. Managements discussing their earnings, funds getting launched, and fund managers defending their purchases. All that and more is happening only and only on BTTV. Thank you.
The Enforcement Directorate launched simultaneous raids at multiple locations, including premises linked to former